Hi, I'm the Do Finance Guy. Today we are going to debunk some myths on how to use credit with the banks. Today I'm going to explain why banks actually want you to carry a balance, how that fits into the credit system. Banks don't design credit cards hoping you never use them. They design them hoping you use them the right way for them. And how to use this information without hurting your credit score or falling into debt traps. Once you understand this, credit stops feeling confusing and starts making sense. If you've ever wondered why minimum payments exist, why interest is structured the way it is, or why some people carry balances and still have high credit scores, now listen to the end of this video and we will recap at the end. Tell me if you are already using some of these methods.
You've probably been told to pay off your credit cards as fast as possible. It sounds like good advice, right? Well, today I'm going to tell you why that common wisdom is not just incomplete, but fundamentally misses how the entire credit system is designed. Banks don't create credit cards hoping you'll pay them off instantly and never use them again. They design them hoping you'll use them in a very specific way that benefits them. And once you understand this, you'll stop being confused by credit and start making it work for you. We're going to break down why banks actually want you to carry a balance, what minimum payments are really for, and how you can use this knowledge to build your credit score without falling into a debt trap. If you've ever wondered why some people seem to carry balances but still have sky-high credit scores, this video is your answer. Let's start with a truth that might feel uncomfortable. Banks aren't your financial advisors. They're businesses, and credit cards are one of their most profitable products. It's not just about the annual fees, it's about interest. When you carry a balance from one month to the next, you pay interest. That's where the real money is made. When you consistently revolve a balance, you become a predictable source of income for the bank. This doesn't automatically mean carrying a balance is a bad thing for you. It just means the system is built to expect it. Think about the minimum payment. Why does it exist? It's not a tool designed to help you get out of debt quickly. If it were, the minimum payment would be much higher, designed to wipe out your balance in just a few months. Instead, the minimum payment is set just high enough to cover the interest you owe, plus a tiny bit of the principal. This keeps your account in good standing, but it also stretches out the life of your debt, allowing the bank to collect interest for as long as possible. A low minimum payment makes you a profitable, long-term customer. Now, here's the part that trips most people up. Carrying a balance does not automatically destroy your credit score. What hurts your score is high credit utilization, meaning you're using a large percentage of your available credit limit. There's a huge difference between having a balance and having a risky balance. Credit scores don't penalize you just for owing money. They penalize you for looking like you might not be able to pay it back. So, how is risk measured? It's not about your feelings or whether you think debt is scary. It's measured by your payment history, your credit utilization, and the consistency of your behavior. Banks love predictable borrowers. They're looking for someone who uses their credit regularly, always pays on time, and keeps their balances well within manageable limits. That person is a bank's ideal customer because they generate steady interest income. Without posing a high risk of default, they are seen as responsible revolvers. This brings us to a major myth. Always pay your card off in full every single month. While paying in full is a great way to avoid paying interest, it doesn't necessarily maximize your credit score growth. Banks make lending decisions based on your behavior over time. If your credit reports consistently show a zero balance, the bank doesn't get to see how you manage debt. An account with consistent, low reported balances, on-time payments, and low overall risk is far more valuable. This tells the bank you're an active, responsible user. This is why you see people with 800+ credit scores who don't always pay their balance to zero. They understand the game of controlled usage. Let's talk about interest, because this is where the fear usually kicks in. Interest isn't a penalty, it's simply the cost of borrowing money. People with strong credit scores don't panic about interest. They treat it as a potential cost of doing business. They ask themselves, what am I gaining by using this credit? Am I freeing up my cash for other opportunities? Am I earning valuable rewards that offset the cost? Am I building a stronger relationship with a lender that will lead to higher limits? Sometimes, paying a tiny amount of interest is a worthwhile trade-off for the financial leverage you gain. The problem isn't interest itself, it's uncontrolled debt. Banks want you to carry balances that stay well below your credit limit. Get paid down consistently and don't suddenly spike to the max. They don't want customers who max out their cards and then struggle to make payments. That's why credit limits increase the way they do. Banks reward responsible revolving behavior, not zero usage behavior. If you never use your cards, the bank learns nothing about you. If you overuse them, you look like a gamble. The sweet spot is intentional, controlled usage. So how do you apply this in the real world? It's all about timing and amounts. To show you're a responsible user, you should use your card for regular purchases. But here's the key. Know your statement closing date. This is the date your balance gets reported to the credit bureaus. To keep your utilization low, you can make a payment asterisk before asterisk this date, paying down most of the balance. You can let a small, manageable amount report on the statement and then pay it off. This strategy shows activity, control, and predictability, the three things banks love to see. There's another reason banks value this behavior: data. Every time you swipe your card, make a payment, or carry a balance, you're giving the bank valuable data about your financial habits. They use this information to decide whether to increase your credit limit, offer you a balance transfer, approve you for a premium card, or consider you for other loans in the future. If you don't use your card, you're not providing any data. No data means the bank has no confidence in you as a borrower. Banks don't build relationships with ghosts. Now, we have to talk about the danger, because this is critical. Carrying balances without a clear plan is exactly how people get trapped in a cycle of debt. The goal is never to carry high-interest debt just for the sake of it. The goal is to use credit as a strategic tool. High-interest debt with no strategy is destructive, but strategic credit usage is powerful leverage. People with excellent credit know their statement closing dates. They know their utilization thresholds. They know exactly how much interest they're willing to pay, if any, for a specific benefit. They never, ever lose control of the balance. That's the line. Here's the mindset shift you need to make. Banks want you to carry a balance because the system is built around responsible revolving credit, not total avoidance. You don't win the credit game by hiding from it. You win by understanding the rules and playing smarter. Your goal isn't to make the banks rich, it's to make their system work for your benefit while maintaining your own financial discipline. Once you truly grasp why banks want you to carry a balance, you can stop feeling guilty or scared about using your credit cards. You can start using them with intention. And when your usage is intentional and strategic, your credit score will reflect that. If this explanation helped you see credit in a new light, make sure you subscribe to the channel. We're all about breaking down how credit really works. No myths, no fear, just the real rules of the game. Once you understand them, you win. Thanks for watching.
My friends, now you see it's not just about paying your total balance off every month, but it's about keeping a consistent payment system with your credit usage below 30%. Because the banks want to ensure that the credit they give is not squandered and at the same time make money through interest payments. I hope that you've learned something from this video and that you will be able to apply these credit lessons to your own financial situation. So if you found information helpful, please like, subscribe, smash that notification bell for my next videos. And don't forget to go to the description for your free tools. See you on the next one.